Hello traders, Gary Wagner with the silver forecast here. Approximately 8:15 in Honolulu, Hawaii. It is the 21st day of March, Monday, and this is the daily review. Silver, along with all of the other precious metals, are substantially higher, but currently off the highs of the day. Silver is currently trading above $36 an ounce, currently trading at 36.02, call it. And that, of course, is the bid of the bid-ask spread. We are looking at a 162-minute Henkin chart along with a MACD, moving average convergence divergence. Now, the reason for me putting that up is that what I have found is that the MACD, the moving average convergence divergence, is very, very good at showing us tops and bottoms of the markets. If you take a look at these crossing points, you will see that they typically come a little bit after a basic move has been made. And so that what it allows us to do is, as we look at various wave counts, we can see when these crossovers happen by comparing the moving average convergence divergence along with the Henkin chart. We are fully in a bullish phase at this point. This morning's Kitco commentary talks about the fact that we did some forward forecasting or analysis, and we based it on the fact that it is my current belief that, like gold, we are currently in wave 3 of a very, very large impulse phase. The easiest way, just in terms of drawing our basic Elliott wave count, our top 5 is here. We had our A, our B, our C wave, which took us to the beginning of the impulse phase. Like gold, we had a tremendous wave 1. That took us to this record top. This is 2. And now it is my belief that we have begun wave 3 of our impulse wave. Now, one thing that you'll realize is that one of the unbreakable rules in Elliott wave is that wave 3 cannot be the smallest of any of the impulse waves. So that if this is truly wave 1 here, and wave 3 cannot be less than this, traders, we are looking at a considerable move in silver. You're looking at a market moving from roughly, call it 26 to 36, a $10 move. That move, of course, 33.60, that's the low in here. You've got 33 to 43 as a benchmark or forecast for this impulse wave. Now, traders, impulse wave is not going to happen overnight, and it's also going to be a complex wave, I believe, with a lot of volatility, so that we should see within that wave probably a 3 to a 5 count in terms of the minor wave found within this intermediate count. Now, traders, in terms of looking at potential points where we might see this market find some resistance, I am going to have to work under the belief that if we follow this upper line for the pitchfork, this is where we ran into resistance prior to this particular point. Here is where we found our support. I am going to take a huge leap here and say that we're probably going to see some resistance if and when this market tracks back to the top of this Andrews pitchfork. Now, that is depending on time-wise, because this particular trend line does move in time, as you can see, but you're looking at, in essence, 37 cents, really, $37 before we see some major resistance in silver. Silver is just on a roar today. As you can see, we are once again looking at a daily candlestick chart. Consider this, traders. Currently, we have gold up, and both are off the highs of the day, but gold 1426 up almost 0.49%, whereas silver is up 75 cents, which puts it up 2.13%, roughly quadruple the move that we are currently seeing in gold. Now, when we look at our daily chart in candlestick format, as you can see, we talked about this on Friday. This is that double doji, and it's such a strong bottom indicator when you get a configuration quite like this. It also, of course, is in that Three River Morningstar variation, and today this is absolutely a huge confirming candle indicating continuation in terms of its trend to the upside. Our resistance area, as we talked about, is going to be right above here to $37 per ounce. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily review. Maintain your long position, maintain your stop.